I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, portfolio manager and consultant at Feneck Consulting. Thank you so much for being here. Great to have you.
Great to be back. Thanks, Charlotte.
Of course, always good to have you here, and we are in some interesting times. There's lots for us to go into in the markets. But before we do, I know you have conferences coming up next year, so I thought we could hear the details on those.
Thanks for mentioning. So yes, we do have two in May of next year. We've been doing Florida. Now this is our third trip to the Four Seasons Oceanfront Florida resort in Fort Lauderdale, which for those hotel bugs is the only five-diamond resort in the county. It's a 3-year-old hotel, so strategically I picked this when they started to open their conference area because it's so beautiful there, and everyone likes to stay at a nice hotel at a new hotel, right? So I think the people there do a great job from a service perspective, but more importantly, we have a great number of companies that are interested in attending there, and we'd love to have some of your listeners check us out. I know Toronto, Vancouver aren't easy trips to Florida. But you know, if people do live in the States and want to check us out, that's easy, direct flight to Fort Lauderdale or to Miami. The other one we're doing right before that is in Washington, D.C., and that's going to be at the Grand Hyatt right downtown near the White House. I spent over 20 years in Washington, so I know a lot of investors there. I think it's going to be a great conference. A lot of these investors wouldn't normally attend a mining conference because they're financial advisors or hedge funds or private equity, but that was the world that I came from prior to getting into metals and mining. So I think, if companies are listening, we're going to have a tremendous turnout there. I helped the Precious Summit team who does Beaver Creek and Zurich with bringing companies to their event in DC about a year and a half ago. And it was very successful. So that's going to be May 17 through 19 in Washington, May 20 through 22 in Fort Lauderdale. And hopefully we'll have some details in the show notes.
Yes, very good. We'll add the details, some links in the video description so people can check it out if they would like to. Let's move on to talking about what's happening with gold. So we're catching up after our last conversation about 2 months ago. So a lot has happened since then. We saw gold run up to new all-time highs, and now we're still pretty close to all-time highs, but we're in a pullback. And I'm wondering if you can talk about where you see support and resistance right now for the metal.
Yeah, sure. So, we had that consolidation area here on the chart earlier this year for about 4 months, which was, let's call it 3,500, 3,600. Obviously that to me is major support right now. We're recording this slightly under 4,000. So, yes, we peaked out at much higher prices, but in my opinion, that was sort of a parabolic move. But, gold is telling you something, right? When you see a move like that in a commodity like gold that is known for safety and its safe haven characteristics, that is telling you something. And I don't know exactly what that is. I could guess. It's telling you that some of the things we've seen with the Fed just yesterday, with Trump and Xi just hours ago from this recording, may not be coming true, right? Like, I don't think U.S.-China sings Kumbaya and high fives each other here for weeks and months to go. This is a week of good constructive talk. Great. But I just don't think they see that as a trend going forward into next year. And I think that's what's you're seeing on Wall Street and on Bay Street in Toronto, which is a divergence of investors, both camps quite smart. One is looking more the Ray Dalio, Stan Druckenmiller billionaire crowd that I am a part of, not being a billionaire at all, but that I follow, that is saying, look, the world isn't as stable as other, world leaders are telling you, or the Fed is telling you that everything's okay. If you just come to the U.S. and travel around and try to stay in hotels and go to Disney and do the things that a lot of tourists do, you're going to come away pretty poor, right? I mean, it is expensive to do stuff here now. I was just reading that Japan, has a Disney that's like a fraction of the cost of just going to Florida or California here. It's crazy. So I don't think the U.S. consumer is going to be as strong as how Trump, insert, leader here in the US, thinks. And look at Amazon just a couple of hours ago, also laying off a good number of workers right before Christmas. Like, when's the last time you saw that, right? Like, that Amazon is the go-to, as far as I'm concerned, from a retail perspective, for many years now in the US. So there's a lot of things, that camp that I'm talking about, the gold silver camp, makes a good point, right? But the other side of things is the momentum, investor side, which is, in my view, a lot of the crypto stuff, a lot of the tech stuff, which is prevalent through the Mag 7. You can go down a list of other, risky or riskier investments, and that, group hasn't done badly either this year, right? So, like, there's two different camps. I've been talking about this on your show all year as they've been forming. We've been seeing them melt up, where gold and the S&P are literally just like melting up together, which is very rare in history. And so the S&P has held up a little bit better than gold over the last few weeks. My thought is, who cares? Like, this is not permanent. The S&P is in trouble. I mean, like, if you're, I say this every time we record, and I don't mean to be a broken record, but I try to really help investors, and helping investors, let me say this: most of your money is probably in your 401k if you're looking at retirement, your retirement money. And a lot of that money is at risk because the S&P has 45% in technology stocks as of August 31st. I mean, it's heavy overweight in one sector. Anytime that's happened in history, you've had a bubble burst. And just go back and look at the 1999 to 2000 or 2000 to 2001 time period where this happened. Or 08, 09, it wasn't as bad back then. The tech thing was more prevalent in the late 90s into the early 2000s. But I would argue the overweight in tech back then was 25, 30%. It wasn't 45%. And now you combine that overweight with, algorithmic buying and selling, increased velocity. That's really dangerous. And investors can wake up, if they're not paying attention a few weeks later and say, oh my gosh, I just lost, 10, 15% of my retirement savings. It's not that far-fetched. And why I say that is, just look at the price action we saw this April when Trump had Liberation Day in the US. Apple lost over 20% of its value in 5 trading days. Of course, it's made it all back and then some, but that was scary for a lot of investors, right? I think you can see a period of time, Charlotte, next year or the year after, where we don't have the quick snapback rally, and if you look at a chart of Apple, you look at a chart of SPY, the S&P, we have had that snapback rally this year, no question, and I was wrong. I was calling for a correction here by November. I mean, it isn't November yet as we record this, but it's darn close. So let's just say I'm wrong. I think that things take time to develop. And let me just touch on one more economic point, and I'll let you ask any other questions. August 1st, to me, was a major deal. That was non-farm payrolls in the U.S. and when it missed, when the U.S. government was open. Remember those days? It missed badly, and they reset the previous two reads back 258,000 jobs. So major revision down. And to me, gold, silver got a huge bid that day. GDX and GDXJ got a huge bid that week going after that. That's telling you, like, smart money is still out there on our side, right? And they're seeing this, again, the two camps, right? Like the camp that we described earlier, the first camp, said, wow, that was a really bad miss, and the U.S. economic condition may be worse than I expect. Hence, let me buy some safety in gold, silver, and gold miners, where you have more safety than you would in the broad market.
So many good points there, and many paths for us to follow down. I think I think I can tell where you're going just by everything that you've laid out there. But for gold, I've been seeing this all week. I've been seeing among our audience here, many people are looking at this and saying, all right, the price is down. This is a chance for me to buy because it's going higher. But there are people who are looking at it and wondering, well, I'm not sure. Is this it for gold? So for you, gold has further to go. I know for 2025, we are past your initial figure that you were looking for the price this year. So have you got another target in mind for either the end of 2025 or a price you're looking for in 2026?
I didn't reset, our price this year. We had a by the summer kind of number of 3,500, which was pretty darn accurate. But then 3,800 was our year end target, as you know, and we just got smoked there. Thankfully, I love being wrong to the downside on anything. So, I think next year, by the time we interview again next time, Charlotte, we'll have our 2026 kind of outlook for gold and silver. But I'll give you silver right now. I mean, silver broke 50 since we last talked, and silver is our largest holding. We've been talking up silver all year. Last year, we were talking down silver, despite it still being our biggest holding, because we didn't think it would have the torque last year. And this year we did. And we thought that because it broke 30 like butter. 30 was major resistance for 11 years in silver. You can go back and look at a long dated chart going back to 1980. It's pretty amazing that it went through 30 like that. But then it, found resistance around 35, eventually broke 35, came up to that 40 number, no problem. 42 to 43 was kind of problematic, which we also had told our followers, we have a real-time email service, so we're literally emailing this kind of stuff on a weekly basis. And then once we broke 42 to 43, we literally said to guys and girls that follow us, hey guys, seriously, this is going to be $50. Like, there's nothing between 43 and 50 here. And we were right. What surprised me was that we cracked through 50 so easily. Like, that was really surprising to me. Because if you go back and look at that 1980 to current chart, I mean, we were at $50 twice in history and for a few hours each time. This wasn't like a sustained 50. And this time has been a sustained 50, right? We're recording this between 46 and 47. But I think silver goes right back to 50 by year end. I don't think that you're going to have a problem with the 50 range, which is really exciting going into next year. So when you inflation adjust $50 for 2011, 2012 prices, you're looking at 66 to $70. And that's really what we're thinking right now for silver next year.
Well, that is very good to go into. So we've got the silver, and we'll come back to you next time we talk and see what you're thinking in 2026 for gold. I also wanted to talk about the Fed today because we had the latest meeting this week. We got a 25 basis point interest rate cut, as I think was very widely expected. But we know that the real commentary, it tends to come when you read between the lines of what Jerome Powell says after the meeting. So I'm wondering what you would pull out for investors to notice there.
Yeah, the biggest change to his positioning on October 29th was really early in his comments at around 2:30 Eastern, when he was saying that there was quite a bit of dissension amongst voters. If you go back into the 1990s, there wasn't a lot of dissension. A lot of these votes are unanimous. A lot of them have one dissenter, but like this was something he pointed out numerous times in the press conference. We won't know until we get the minutes, as to who was dissenting against who. But it doesn't really matter. It's telling you that the Fed is, well, according to Powell, the Fed was, basically like on the fence about a December rate cut, which I think is nuts. Because if you look at the CME Fed Watch tool, which we've shown your listeners before, it's a free website. I looked at it as he was speaking, and there was a 90.3 probability that this was going to be a cut. Now, it went down to 88% after his speech, but it's still, I'm not looking at it now, let's say it's 75. It's still a probability that we're going to get a cut December 10th, right? And so, I think he may have covered his bases by saying that kind of commentary, because we haven't been given current data in about 4 weeks because of the US shutdown, right? So he was saying, hey, we're relying on a lot of private data and other stuff. And that's fair. I mean, this doesn't happen very much in US history, right? So we just got a delayed CPI read, which wasn't problematic, but we haven't gotten those non-farm payrolls numbers. We haven't gotten certain pieces of data that the Fed would typically rely on to kind of look at, the path forward. All this to say, I think December 10th is still a 25 basis point cut as we record this. And I think that I know that Powell has his term up next year, right? So there is going to be someone else leading the U.S. Fed. And I would, if anyone's a betting man or woman, I bet that Trump has an idea of who he wants to put in that role. And they're not going to be anti-rate cuts. So I think that backdrop, right, if I'm correct, is extremely bullish for gold and silver versus the hawkish kind of tone that Powell just had yesterday.
I think that's a really good overview there. And yeah, it sounds like we'll have to wait and see on a lot of points. I was going to ask you if you have any thoughts on who the next Fed chair could be. I've seen headlines, articles saying there are 5 people under consideration. A lot can change before we get to the actual date when it happens, but any initial thoughts and what the impact could be?
No, I would just say that look at Trump's work in his previous, period of time as president. He got what he wanted out of the Supreme Court. What makes you think that he wouldn't do the same with the Fed? Like, I really feel as a real estate mogul, he wants lower rates. Everything in his portfolio is rate sensitive, right? So like, I really think that is something that investors need to be understanding of. Like we were on your show last summer, if you remember, when Biden lost that debate really badly. And I just said, hey, this is like kind of an all-in moment for Trump. I think I recorded with you maybe a week or two after that. And we started to reposition our portfolio to U.S. assets, not just North American assets, because I thought at a Trump win, we would see support for the mining business because non-farm payrolls would wane at some point in 2026 or 2025, excuse me. It's been better than anything in my wildest dreams. I mean, Trump's executive order in March was like the kickoff in writing to, tell his staff, hey, get all of these projects on my desk within 10 or 15 days, whatever it was. And then in April, he doubled down with fast tracking a bunch of mines in the U.S. And, again, this is like 40th page news for the average investor. They don't care. But we care, right? The people listening to your show right now care because this is important. This is a change of behavior away from, hey, we're never going to permit your mine to, hey, we're really thinking about finding ways to be more constructive towards permitting, which is really, really bullish for stocks. And you're seeing those mining stocks starting to, respond. To give you a couple of examples there, American Tungsten, TUNGF in the States, TUNG in Canada. They're a past producer in Idaho. Ali Haji has come on and done a really good job this year of being more communicative, I'd say, to the public about what their plans are. And he's providing at least 2 construction updates in the last 3 months that I've seen in their public news. So it keeps people focused, right? Like you see the price of tungsten going up. You see China and US kind of banging heads. China's the biggest producer of tungsten. Like you can start to put together an idea of, hey, this stock should do pretty well if China cuts off supply to the US, which I still feel is on the table for next year. I don't see anything this week that's going to change that dramatically. But the stock was around $340 a share, $350 a share just a couple of weeks ago. It's trading at $1.36 right now. So they did a financing in the middle of that, Charlotte. As you know, when companies do financing, sometimes it dilutes current shareholders. But I don't think it's that big of a deal. Like they don't have a blown out share structure. They're in the right part of the world. I know they're advancing the project. So again, you have to look at what's the path for that company. Well, they want to put out a 43-101. They want to drill. Their raise indicates there's a lot of interest out there because they upsize the financing, et cetera. So, we'd be buyers of TUNGF here based on the pullback from $350 a share to $136. I mean, maybe $350 was too high. $136 is too low. Another one in tungsten, while we're talking critical minerals that's flying under the radar to us, is Triumph Gold. Again, nothing in the name about tungsten, but they have quite a bit of it on their Yukon property. So this is a Canadian-U.S. play. It's TIGCF in the States, TIG in Canada. I met John Anderson just this year. John's got a tremendous track record in mining. He's been doing it for many, many years. And he's taught me a lot about how undervalued the property is. You know, they only have, let's say, 1.5 million ounces of gold identified in the Yukon, but on that same property, they have 15 million pounds of tungsten. So when you look at a company, you have to look at how can they, you know, legally tell the public about what they have, right? And there's different things. 43101 is one of those instruments. A PEA, a preliminary economic assessment, is another. PFS, FS, and then a construction decision, just to make it real simple. But that could take years and years to get through those 5 phases, many years. Triumph put out a PEA, I think 12 or 13 years ago, and they haven't put out an updated one since. So as a value manager, you look for these things. This is all in their public documents, right? And so I called up John this year and I said, hey, you know, tell me about your property. Like, why haven't you spent the money to update that PEA? And he said, John, you know, the market wasn't rewarding me to put out drill results and press releases over the last couple of years, so I haven't. But I hear you. I see that gold now is breaking out, and we're planning to, you know, get things moving. And after that, he bought a silver property in Utah. So I thought that was a good move because the Yukon had some black eyes this year from Victoria Gold. I think that's overblown because Triumph's property is a couple 100 miles away, I think, from Victoria. It has nothing to do with that region. But again, diversifying away from his Canadian property only into America, really good call. And he did that for pennies on the dollar. His project in Utah only cost $150,000 plus some stock. So really cheap. And he plans to drill that when they raise money again. So, you know, those are 2 names in the critical space to, you know, share with your listeners that, you know, in full disclosure, we own, but we're adding to on dips. You know, Triumph got really cheap here recently. We added to it, and we're suggesting, you know, that we may be doing the same thing in American Tungsten here.
Really good to get the critical minerals updates there. I do think it's so important to be looking at that sector right now because of this government interest. I think I was a little skeptical at first because you get government saying, oh yeah, we're going to do this, we're going to provide support, but it really seems to be coming through. So again, very good to go through that. And I'll ask you as well about updates on the precious metals companies you're following, because of course that's also pretty hot right now.
Yeah, of course. So we've talked about silver many times in your show and silver stocks that we like, and all of those have really worked out. I can't really think of anything in the silver space we've mentioned that has been a dud. Aftermath Silver has been a lights out name that we've talked about on your show before. Lights out in the sense that we've talked about it at, you know, 14 cents, 17 cents, 21 cents. You know, it's trading at 53 cents right now. So the stock hit 81 cents recently on heavy volume. It's pulled back quite a bit. And again, like American Tungsten, when you see a pullback in a bull market, you have to buy that pullback. It's a gift that we're getting pullbacks of this much in percentage terms because the stock today is at 52 cents. So 81 to 52 is not a small correction. That's, to me, a large correction. And so we bought more literally today. The ticker there is AAGFF in the States, AAG in Canada. Again, 140 million ounces of silver. So one of our strategies has been buy small companies that are undervalued, that have a lot of ounces in the ground, whether that's tungsten, whether that's gold, silver, it doesn't matter. We think that we're going to be, you know, in an environment in 2026 and 2027 when bigger companies are going to say, I need those resources and I will pay you for them. Another one is Blackrock Silver that we just started to track, BKRRF in the States. And Andrew and I met about 2 years ago at a conference. They've really done a great job of advancing that project since we met. They claim to have about 100 million ounces right now of silver. So not as much as Aftermath, but also, I would argue, in a better jurisdiction in Nevada. And that chart really has taken off BKRFF. Yeah, that's basically just, sorry, I think I misspoke, BKRRF. But really interesting story there. Good news this week from an analyst that upgraded the stock to a much higher price target than we're trading at right now. I think analysts in our sector in general, need to do a better job of talking to people like Andrew and Ralph and Michael and trying to get the story. They can only do so much with limited data out there, right? But these companies will be putting out, different reports to show the advancement of their projects. And analysts need to be ready to upgrade these stocks to save face, because some of these stocks are really, really undervalued. They're going higher, and a lot of these analysts are asleep at the wheel. Don't just take my word for it. Look at Newmont, earnings last week. NEM killed their earnings estimate. Stock went down 7.5% because this can only happen in gold. But it has since rebounded. Agnico today, AEM, another huge beat, and that stock was rewarded. Sometimes timing really matters, Charlotte, for like an analyst report on Blackrock or an earnings report like we just discussed. Good day for gold and silver today. Agnico is up nicely. I remember when Newmont put their report out, the market was down that day. So you kind of have to look at that and say, let's just look at the numbers, right? The numbers don't lie. If Agnico's all-in sustaining cost per ounce was $13.73 an ounce, gold's at 4,000, big round number, let's just say, right? How are you not making killer margins in that scenario? It doesn't matter whether it's called Agnico or ABC Mining. I always like to show clients that are skeptical, if I'm in person at a conference or something, hey, here's a chart, of this company. Here's the metrics of like their all-in sustaining costs, their revenue growth, blah, blah, blah. Would you buy that stock? And 99 out of 100 times it's yes. And then I show them it's a gold stock. They're like, oh, I don't buy gold stocks. So, our portfolio right now is heavily overweighted towards gold and silver. I gave you a couple of small silver names there, and I gave you a couple of big gold names. And I'll lastly just touch on Mexico, because you and I had talked about that 6 to 8 weeks ago, because I was at Beaver Creek at the time, and I had seen a lot of people from Mexico at the conference. I think Mexico is turning the corner. They have permitted quite a few mines this year, and that really isn't getting recognized by the investing public, because they've been permitting underground stuff, not the open pit stuff. Now, open pit is something I think Scheinbaum will have to look at by next year, because they aren't doing great from an economic perspective either, Mexico. And this is going to, just create a ton of jobs. We mentioned three names on your show last time. We mentioned Sonoro Gold, SMOFF, and SGO in Canada. We mentioned GoldGroup, which is GGAZF in the States, GGA in Canada. And then lastly, we mentioned Questcorp, which is QQCMF in the States and QQQ in Canada. Now, they're all different in terms of where they are. GoldGroup has been one of the best performing gold stocks year to date. I haven't seen too many stocks up as much with the kind of volume increase that they've experienced. They just bought the San Francisco mine, which has 1.4 million ounces of gold. I know they've worked for about 3 years to get there. So a lot of times when you read these headlines, you think that, someone was acquiescing and giving, a company like GoldGroup this project for X price, but it's a lot of negotiation back and forth. And there were multiple bidders involved there. So Eric Sprott, who I have a lot of respect for, just came into GoldGroup this year for the first time. I can't give you the exact percentage because I don't have it in front of me, but I know it was like a 12 to 14% position, which got my attention. And he did that a few months back, so it wasn't like ancient history. The other stocks we just talked about, Sonoro Gold. I just did an interview with the chairman and the CEO, which you guys can search up on YouTube. If you just put in my name and Sonoro Gold, you'll see it there with my partner, Don Durrett. Don loves this stock. He thinks it's very, very undervalued. He likes the low capex that the stock has. I do too. I think that when you're looking at any stock, whether it's gold, silver, copper, it doesn't matter, you have to look at what it's going to cost to build that project. And that's what we call capex. And their capex is extremely small. I think they could finance part of it with debt. So it's not as dilutive as other mines that you'd see out there, right? Also, their all-in sustaining cost per ounce is quite low already. But remember, that report was done at a much lower gold price, much like we just talked about with Triumph Gold, where once companies update that report, Charlotte, it can be a real re-rating in the stock. Sometimes it does nothing, but there's potential there. And they told us on the interview, which is public news, that they plan to update their PEA next year. So that's another catalyst for that stock that has nothing to do with permitting. And lastly, Questcorp. I saw Saf, the CEO, a couple weeks ago at the Stockholm conference I was speaking at, and he was telling me that, we only put out a couple of drill holes right now, but given the environment that we're in, we plan to raise, some money and to drill more holes, right? So I think that's a great strategy, because in a hot market, this is exactly when you want to drill, especially if you trust your geologist and you trust the property, right? Like, this is when you go for it. You don't go for it 3 years ago. Easy to say, looking back in the rearview mirror, but clearly, if you know how to look at charts, which I do, gold is taking off, right? Like, this is when, as a gold stock, like the three I just named, you want to drill for gold. Like, it seems like, how hard is this to figure out? But many companies are still kind of like, well, we're seeing if this rally is real or whatever. It's like, come on. I mean, all the companies I just mentioned to you are going for it. And that's what we like. We like people that are decisive and are committed to their shareholder base.
Good updates there as well. And for everybody who's listening, we will have those names and tickers in the video description. I know we always get asked what are the names, so they will all be there. And I will let you go for now, unless you had any final thoughts that you would leave investors with right now.
Well, we have 3 services, Charlotte. One is an email service. We talked about like a real-time email service, and where that's valuable is like on a day like yesterday with the Fed, right? We put out something 5 minutes, I'd say, later than Powell got off stage, and it was a good summary of what was happening. We were disagreeing with Powell being hawkish. We said, again, the fact that he's talking about December possibly being off the table is a change in tone. However, it's not something that's realistic. It's like the Fed is in a corner right now. So we took a different stance, I think, than a lot of my competitors would have taken. But my clients are getting this literally 5 minutes after it was said. So that's the benefit to our service over a newsletter, which I also have for a lower price, because I had to have it, right? I've been writing a newsletter for 4.5 years now. But the real-time email service we've had for 6 years, and it really separates us from the pack, because not only do you get emails on a regular basis from me, you get all of our interviews like this transcribed by me. So I tell people, hey, I talked about this with Charlotte at this time, just to clarify, so people understand like what I was talking about, because I realize this is kind of fast paced. And they get all of our holdings. We're very transparent. So there's a lot that goes into our real-time service, which is known as the mining report on our website. In addition to that, they can buy calls. So a lot of clients are confused coming out of a period of time where gold and silver stocks didn't do that well the last few years. Now they're in a period like they see the opportunity, but they still own stocks that haven't done very well, right? And they need sometimes just to talk to someone to get it off their chest, to say, like, my financial advisor really doesn't understand what I own. And we can't tell them buy, sell, hold. We're not a licensed advisor anymore. But what we can do is say, hey, I was just talking about this on Charlotte's show. I was just buying American Tungsten at $1.36, right? Like, so this is something that I have more conviction.
All right. Well, we'll have all your information in the video description. And thank you so much for coming on today to go over everything. I think we covered, once again, a lot of ground.
Yeah, my pleasure, Charlotte. Thanks a lot.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck of Feneck Consulting.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.